Hello students, you are the future chartered accountants of India. I hope you have revised the first part of this chapter, right? Today we are proceeding with this chapter, and before that I want to clarify one thing. You are not in a position to compare yourselves with the other people because everyone's question paper, life's question paper is differently drafted by the creator of the world. So you are not in a position to compare with the other people, but you can compare with only with yourselves, because if you are better today than yesterday, then you are in a good position. If not, you are not in a good position, right? So by keeping this point, we'll going further the actual basics chapter. I welcome you all for Abhi CA classes. This is Abhijith Acharya. Welcome you all for today's classes. Till now we have discussed the basics of the basics chapter. From today onwards, we are discussing some practical aspects of this basics chapter. Okay. First of all, the rates of taxes, surcharge, and cess. Actually, if you have arrived at some income, right, now you have to apply the tax rates to compute the tax amount. This is the basic funda of this the part, right? First of all, we will discuss for individual AOP, HUF, BO, and AJP. The definition of these have been already discussed in the last class, and for that, first discuss the default tax regime under section 115 BAC. This is a section. This has been amended recently in this budget, so it will be definitely a good question to your examination attempt. Okay, first up, it is applicable other than income specified under section 111A, 112, 112A, 115BB, 115BBJ, etc. What are these sections? We'll discuss in detail in the upcoming parts. First of all, this is not applicable for these sections. What this section says about is, if your income is up to 3 lakh, then you need not to pay an income tax amount because the tax rate is nil. If your income is lying between 3 lakh to 6 lakh, then you need to pay the difference amount of only for 5%. For example, if your income is 4 lakh, up to 3 lakh, nil. 3 to 6 lakh, that comes to 3 lakh. Actually, your income is 4 lakh, right? Up to 3 lakh, nil. 3 lakh to 6 lakh lies only for 4 lakh. Actually, 4 lakh minus 3 lakh, you have to do that is only 1 lakh. 1 lakh into 5% is the tax amount. If your income is 6 to 9 lakh, then the tax rate is 10%. It is cumulative. You have to add the first category and then come to second category. Okay, next, if your income is 9 to 12 lakh, then tax rate is applicable is 15%. If your income is lying between 12 to 15 lakh, 20%. If your income is more than 15%, then it is 30%. For example, if income is 17 lakh, let's assume, up to 3 lakh, nil. 3 to 6 lakh, difference 3 lakh into 5%. Next, 6 to 9 lakh, difference is 3 lakh into 10%. That's the tax amount. Next, 9 to 12 lakh, difference is 3 lakh into 15%. Next, 12 to 15 lakh, difference is 3 lakh into 20%. Next, more than 15 lakh, that is in your case only 2 lakh, because if your income is 17 lakh, more than 15 lakh means only 2 lakh. 2 lakh का 30% होता है something amount. If you add all these, this is the final tax amount that you need to pay to the income tax amount as of now. Okay, I think you have understood this concept. Next, in order to avail this benefit, in order to claim, because this is a benefit given to the individual, those of the SSCs. If you are wanting to opt for these sections, you need to forego some of the benefits available under different categories of your income. First of all, I will suggest you go through this in brief. Later, while doing a individual chapter, you will be in a better position to understand this concept clearly. As of now, keep in mind that you are just briefing this out. That's it. First of all, what is the section you need to forego? Section 10 subsection 5, that is leave travel concession. This we will going to clearly discuss in the salary chapter. That exemption is actually available. If you want to opt for 115 BAC section, the above mentioned tax rate, then you need to forego this the tax exemption. Okay. Next, 1013A. that is house rental allowances, that also you need to forego if you opt for this section. Which section? This is 115 BSc. Next, section 1014A, exemption in respect of special allowances to meet job as expenses, that also you need to forego. Next is 10 subsection 17, daily allowances, constituency allowances of MPs and MLAs, that also you need to forego if you opt for this section. Next, section 10 subsection 32, exemption of minor child included in parents' income. What is this? We will discuss clearly in the upcoming chapters, but you need to keep in mind just for this purpose for actually as of now. That's it. Next, section 10AA. This is tax holiday for units established in SEZ, that is special economic zones, that we will discuss in PGBP chapter, that is business income chapter. Okay. Next, section 16 subsection 1 and subsection 2, entertainment allowances and professional tax, that also you need to forego. Section 24 subsection B, interest on loan for self-occupied house property. If it is lettered house property, then that benefit will be given. If it is for self-occupied property, that benefit will be ignored if you opt for this section. Next, section 32 1 2A, additional depreciation, that also you need to forego. Next, section 35 1 2 2A 3 or 35 2AA, deduction in respect of contribution made to the scientific research organization, that also you need to forego. This we'll cover in PGBP chapter, that is business income chapter. Next, 35 AD, specified business deduction, that also we'll discuss in PGBP, that is business income. As of now, keep in mind, that's it. 80C to 80U, this we'll discuss in deduction chapter. Deduction under section chapter 6A, other than, this is important, other than section 80 CCD subsection 2, employer's contribution to the NPS, that is National Pension Scheme, and 80 CCH subsection 2, that is central government contribution towards Agnipath scheme. Next, section 80 JJEE, deduction in respect of employment of new employees, that also, other than these section deductions, you will not be actually allowed to claim any other deduction under chapter 6A deductions. Okay, clearly we will discuss in deduction chapter. As of now, keep in mind, that's it. That is only funda. Let's say you cannot just set off your any business loss or unabsorbed depreciations. If you have any other, if you are lost in other head of income, you cannot set off that a loss against any other income if you opt for this section. Okay. And next, HP loss means house property loss cannot be set off against any other income. Next, SSE is not required to pay AMT. What is AMT? We'll discuss clearly in the upcoming chapters. That is alternate minimum tax. But brought forward loss, brought forward AMT credit cannot be set off against income under section 115 BSc. If you are brought forward AMT credit, that also you need to forego. That's it in simple words. Next, if SSE has a brought forward amount credit, this is our suggestions. As a tax practitioner, as a chartered accountant, we need to guide the clients that if you have any brought forward AMT credit, first you need to exhaust that, then you can come to this 115 BAC. This is our suggestion to our clients. If the same thing I have mentioned, because it is already, if you opt for this scheme, that brought forward AMT credit will obviously what you call removed, right? Obviously not available, right? So hence, first that client has to exhaust that AMT credit, then he can come to 115 BAC, so that both benefit, two-way benefit will be given to that client, right? That is, we have mentioned. If SSE has a brought forward AMT credit, it is advisable for him to first exhaust the same and then opt for 115 BAC, right? Next, in order to claim this benefit, that is 115 BAC, because it is a beneficial scheme for individual, in order to claim this benefit, Form 10IE, this can be asked in MCQ. Form 10IE has to be filed along with the return of income, that is your income tax return, on or before the due dates mentioned under section 139 subsection 1. If he has not filed his return within the due date, then he is not able to opt for this 115BA. See, this is a crucial point. I will tell once again that in order to claim this benefit, Form 10I has to be submitted along with his income tax return. But remember, income tax return has to be submitted on or before the due date mentioned under section 139(1), subsection 1. What is the due date? We'll discuss in the last chapter of this subject, it is income tax. But keep in mind, if you want to claim 115BAC, then the client needs to file his income tax return on or before the due date specified thereunder, right? Next, exercising this option. If he is individual HUF, is not having any business income. Let's say I am not having a business income, I am having only salary income and interest income, that is FD interest or SB interest, whatever it may be. Then that assessee can choose any of the tax regime because it is a deferred tax regime. Another one is old tax regime is existed. He can choose any of these based on the income tax liability. If out of these, if any one is beneficial for him, then he can choose any one of these. For example, in current year, if the client thinks that having only salary income or any other, not having a business income, thinks that his tax liability is lower in new tax regime, that is 115BAC, than old tax regime, then he can choose 115BAC, that is default tax regime. In next year, if he assumes that under old tax regime he is benefited, then he can choose the old tax regime, he can forego the new tax, that is 115BAC, he can forego. He is having the choice, right? He is having the choice, right? That's it. But if the client is having a business income, this is very crucial, very crucial. Having a business income, then if once the option is exercised, it cannot be withdrawn except the assessee ceases to have a business income. It's a little bit confusing. Once the option is exercised, it cannot be withdrawn except the assessee ceases to have a business income. Let's see one example. If I am having a business income, previous year 23-24, the current previous year, I am opting for 115BAC, that is default tax regime. Next year, I will opt for old regime. Next 25-26, I cannot come again to 115BAC until I am not having the business income. Okay. If in 25-26 also, if I am having the business income, then I am not in a position, I will be not in a position to again come back to 115BAC. I will be only possible to come under only 115BAC only if I do not have the business income. I hope this is clearly understood to you, right? 115BAC this year, next year not 115BAC, old regime. In the upcoming year, he can opt for only for 115BAC only in that situation that I do not have that business income. If I do have business income, then I am not in a position to claim for 115BAC in 25-26. 2025-2026. This is the default tax regime. Once you go through this, I hope you will be in a better position to understand, but ignore these sections as of now because you have to keep in mind just that's it. But what I suggest is after completing all the chapters, I request all of you to come back and read this section again so that you will be in a better position to understand how these are being explained in that chapter. Okay. Next, as already suggested, now the normal tax regime. This is termed as old tax regime. This has been prevailed for a long period of time. First of all, I would first individual HUF, AOP, BOI, AJP. First, if total income is up to 2.5 lakh, rates is nil. 2.5 to 5 lakh, 5% on income. Next, 5 to 10 lakh, first 12,500. How 12,500 arrives? This is simply because first category is 5 to 2.5 to 5 lakh. The difference is 2.5 lakh. That right into 5% comes to 12,500. If your income is 6 lakh, let's say 12,500 plus More than 5 lakh up to 10 lakh, how much it is? Only 1 lakh, right? 1 lakh ka 20%. 12,500 plus 20% of 1 lakh, that is 20,000. If you add those two, that is 32,500 is a tax amount. If your income is 10 lakh, then 1 lakh 12,500. How 1 lakh 12,500? First 12,500, because 2.5 to 5 lakh difference is 2.5 lakh into 5% is 12,500. It's a cumulative 12,500. Next 5 lakh to 10 lakh. Difference is 5 lakh into 20%. That's a rate applicable, right? That comes to 1 lakh. If you add those two, that is 1 lakh 12,500. If your income is 10 lakh above, then for example 12 lakh. 10 lakh above means only 2 lakh, right? 2 lakh ka 30%, that comes to around 60,000, I think. 60,000 plus 1 lakh 12,500. If you add those, that is 1 lakh 72,500 if I am not wrong. That is the tax amount that you need to pay. Okay. Next, individual being an Indian resident. This term is very, very important. Individual being an Indian resident, that resident should be key point in your mind. If he is a non-resident, then this benefit will not be given. If he is a resident, having an age of 60 or plus, 60 or more, and below 80 years, this is termed as senior citizen. If he is an Indian resident having an age of 60 to 80, then he will be termed as senior citizen. For him, up to 3 lakh, 0%. 3 to 5 lakh, 5%. 5 to 10 lakh, above for actually 10,000. How 10,000? Because 3 to 5 lakh difference is 2 lakh into 5%, that's come to around 10,000 plus 20% of income above 5 lakh. Next, above 10 lakh, 1 lakh 10,000. How 1 lakh 10,000? First 10,000 plus 5 to 10 lakh difference is 5 lakh into 20%, that comes to 1 lakh. 1 lakh 10,000 plus 30% of the income in more than 10 lakh. I think you will be in a better position to understand. But this higher rate benefit, basic exemption limit, is not applicable if that client has opted 115 BSc concept. Very important. If you opt for 115 BSc, even though you are a resident senior citizen or super senior citizen, you are not in a position to obtain that benefit, right? Up to 3 lakh, up to 2.5 lakh, that called as basic exemption limit. Basic exemption limit means up to that limit, you are not going to pay any income tax amount. Up to 2.5 lakh in the first case, second case up to 3 lakh. Up to 3 lakh is a basic exemption limit. Next is a resident individual having an age of 80 plus, 80 or 80 more. Then up to 5 lakh, 0. This is the basic exemption limit applicable for. This is called super senior citizen. 5 to 10 lakh, 20% of 5 lakh. Next, above 10 lakh, first 1 lakh plus 30% of income more than 10 lakh. Okay. If your income is 12 lakh, up to 5 lakh, 0. 5 to 10 lakh, that difference is 5 lakh into 20%, 1 lakh plus 12 lakh is only 2 lakh into 30%, that is 260,000. 1 lakh 60,000 is a tax amount that you need to pay to the government, right? That is one important note. A resident Indian whose 60th or 80th birthday falls on 1st April 2024 shall be also be treated as having completed the age of 60th or 80th birthday as on 31st March 2024, and hence he is eligible for higher basic exemption limit respectively of 3 lakh and 5 lakh. Let's say for example, because of only for 1 day delay, he is not in a position to avail that benefit, right? So income tax authority through circular that 28/2016 dated 27th July 2016 came up with this concept that if any individual who is having a birthday of 60th birthday or 80th birthday on 1st April 2024, he also be eligible for claiming higher basic exemption limit of 3 lakh and 5 lakh. If he opts for only old tax regime, if he opts for 115 BSc as discussed earlier, then this concept is irrelevant. Okay, simple. Next, income tax rates on special income. The following categories are called as special income. Okay, special income, what actually we have already discussed it, because 115 BSc is not applicable for these sections. Remember that those sections are clearly defined below. Section 112. What is 112? LTCG, that is long term capital gain. Long term capital gain other than section 112A. Because 112A is separately discussed below. The rate is 20%. This flat 20%. The slab rate division is not applicable. Slab rate wise tax rate is not applicable for this special income. If you are having a 112 LTCG, that is long term capital gain, then 20% is the tax. What is 112? We'll discuss in the capital gain chapter. Okay, next to 112A, LTCG, that is long term capital gain on transfer of equity share in a company or units of equity oriented fund or units of business trust, then 10% of more than 1 lakh LTCG is a tax amount. Up to 1 lakh, there is an exemption. More than 1 lakh, that for excess only 10% is the tax amount. For example, if your LTCG from these out of these securities is 1,50,000, up to 1 lakh 0. More than 1,50,000 is 50,000. For that 10% is 5,000 is a tax amount that you need to pay under 112A. Simple, but there is one condition. If you are holding that equity shares, then STT, that is securities transaction tax, should have been paid both at the time of sale and purchase. This will be clearly given in your question paper in a question, so that don't worry. Then units of equity oriented fund, if you are holding a units of equity oriented, that is called mutual fund in short, or business trust, STT, that is securities transaction tax, should have been paid only at the time of sale. This also will be given in your question. This is the two conditions. Next, 111A, above is LTCG. Now we are going to STC, that is short term capital gain on the transfer of equity shares in a company or units of equity oriented fund or units of business trust. The tax rate is 15% flat, no exemption. That unlike LTCG, that is 1 lakh, that is no exemption is available here. The condition the same. The transaction of equity shares or unity should be entered into on or after 1st 4 2004, and such should have been charged to STT. The same concept. This will be clearly mentioned in your questions. Okay. First one is 112, 112A, 11A. Next 11BB. Winning from lottery. If you are holding any lottery, if you win any lottery income, that also to be charged under Income Tax Act. What is the rate? 30%. Oh, huge. If you, let's say for example, 100 rupees is a winning, 30 rupees you need to pay to the government. 70 is in your pocket. That's it. Then horse racing, including horse race, card games, and gambling other than actually online game, because online game as mentioned in the next section. Okay. That is 30%. Next 115BBJ, income from online games, that is PUBG or something else, I don't know the name, the 30%. Next 115BBE, section 68, 69, 69A, 69B, 69C, 69D. That is flat is rate is 60%. Wonderful, right? Horrible, 60%. This last section will we have kept at the last of this chapter, in the last portion of this chapter, because this is a wonderfully interesting section, because 60% tax, very horrible, right? If you are earning is 100 rupees, let's say 60 rupees you need to pay to the government of India, only 40 is your income. What? Because there might be some of the issues, right? Don't worry, we'll discuss in the last portion of this chapter. Okay, I think these are all the special income: 112, 112A, 111A, 115BB, 115BBJ, 1B, 115BBE. Okay. Next, the concept of surcharge in case of 115BAC and normal tax regime. What do you mean by surcharge? In simple words, surcharge means tax on tax. So, how do you mean by tax on tax? We have discussed what is the tax amount, how to compute the tax amount. On that, separate tax is leviable on the satisfaction of some of the criteria. That is, tax on tax is named as surcharge. It's not applicable to everyone, but the above is applicable for everyone, having satisfied the basic, actually that is slab rates, right? That is called surcharge. Actually, we have categorized the both 115 BAC and normal tax regime. Okay, if your total income is up to 50 lakh, then for both 115 BAC and the old tax regime, the surcharge is 0. If your income is 50 lakh, let's say, then surcharge is not applicable. 51 lakh, we will see. Next, total income is above 50 lakh up to 1 crore. Then for both 115 BAC and the old tax regime, the surcharge applicable is 10%. So how it is applicable? How it is computed? Let's say, for example, your income is 60 lakh. First, you need to compute whether he is opting for 115 BAC and normal, that is a old tax regime, and accordingly you need to compute the tax rate that we have discussed actually some time before, right? That you need to, that slab wise you need to compute the tax amount. 60 lakh, I will say simply. For example, he is opting for normal tax regime up to 2.5 lakh 0, 2.5 lakh to 5%, 5 to 10 lakh 20%, about 10 lakh is in this case 60 lakh, about 10 lakh is 50 lakh, 50 lakh into 30%, that is the tax amount. On that tax amount, you need to add 10% as a surcharge, not on his income, not on 60 lakh. 10% on tax amount computed just before that we have discussed, right? In this case, tax amount, let's say for example 2.5 lakh, let's say, is not an accurate figure, 2 lakh. On that 10%, that is 20%, is the additional tax that client needs to pay to the government. That's 2.2 lakh. Simple. Next, if his total income is 1 crore to 2 crore, then for both situations, the surcharge rate is 15%. Then, if he is having only dividend income, capital gain under section that we have this special income 112, 111A, 112A is more than 2 crore. Only having those much of income, having exceeded 2 crore, up to that, no, the surcharge will be leviable. Okay, both situation 15%. If I am having only that special income exceeding 2 crore, then surcharge rate will be 15% in addition to the tax rate. Okay. Next, if your total income other than dividend 112, 112A, 111A, other than is exceeding 2 crore, then if he is opting for 115 BAC or new tax regime, then surcharge rate is 25%. Only for 115 BAC, 25%. If your total income other than dividend 112, because if your income is if you are having only special income, whatever may be your income above 2 crore, the flat 15% of the surcharge will be leviable above 2 crore. Okay. And then your total income other than dividend in 112, 112A, 111A it lies between 2 crore to 5 crore. Then if you are opting for normal, that is old tax regime, then 25% of 25% only for other income. Because for special income, if you are having special income, then 15%. Simple. Next, total income other than dividend 112, 112A, 111A, more than 5 crore is your income. Then you are opting for a new tax, old tax regime. Then the surcharge is 37%. If you are opting for new tax regime, that is 115 BAC, maximum surcharge rate is 25% only. If you are opting for, and hence I have written 115 BAC normal separately. If your income is more than 5 crore, then the surcharge is 37%, and for dividend other than special income for 15%. I will discuss once again. Up to 50 lakh, 0 in both cases. 50 to 1 crore, both the cases 10%. 1 crore to 2 crore, both the cases 15%. Only special income more than 2 crore, both the cases 15%. Okay. Next, total income other than special income, if you are opting for new tax regime, that is 115 BAC, more than 2 crore, surcharge is 25%. And special income, if you are having a simultaneously special income, then 15%. 15% is the maximum surcharge for special income if your income is more than 2 crore. Then if you are having income is 2.2 crore to 5 crore, if you are opting for old tax regime, then surcharge is 25%. Then if your income is more than 5 crore, especially in case of old tax regime, surcharge is 37%, and for other special income, that is 15%. Understand? Simple. But there is one note. first we will read this, then we will see example, then again we will read this concept. So it will be better to understand, and after that we will wind up this part, okay, because it will be a heavy burden for you to revise the concept, because if you revise everything in one shot, then I also understand that the difficultiness, okay. The note, SEC will never be hit with the surcharge of 25%, that is higher charge, than 37%, merely because such dividend capital gains push his total income into exceeding 2 crore and 5 crore brackets, but the remaining income is less than 2 or 5 crore. For example, actually what it means is, the second thing I will also explain now itself. That means SSC will be levied the surcharge of 25% or 37% only if his remaining income other than special income crosses 2 crore and 5 crore. I think through sentences it is possible to understand, but with the examples it is more likely to be possible to understand. What is example? Example, if you are, let's say, if your other income, special income, not special income, other income, let's say 45 lakh, special income is 70 lakh, total income cross around 1.15 crore. Then for both special income, actually it is, we have written that for special income more than 2 crore it is 15%, but his income is exceeding the 1 crore, right? We have to apply the surcharge of 15% for both special income as well as 15% for other income. Let's say, for example, next example, if your other income is 45 lakh, other income is 45 lakh, special income, that is dividend 112, 112A, 111A, 600 lakh, total income comes around 645 lakhs, right? Very huge amount. If you opt for an old tax regime, as per the last category, the surcharge will be applicable for 37%. But what it says is, SSC will never be hit by the surcharge of 25% or 37%, merely because such dividend pushes his income into more than 2 crore or 5 crore. But remain, that means the SSC will be levied the tax of 25 only in case if the remaining income exceeds only 2 crore or 5 crore respectively. In this case, other income is not exceeding 2 crore or 5 crore respectively. Only with the help of through special income only, his income crosses 5 crore. That means he doesn't, he is not livable with the higher surcharge. He is only actually livable only with the 15% surcharge. This is the flat amount, because even though his total income exceeds is 1 crore, right? So he is required to pay the surcharge of only 15%. Okay. Next example. Other income 1.5 crore, special income 500 crore, sorry 5 crore, total income comes around 650 lakhs. Only with the, actually only special income crosses with the, only total income crosses 5 crore above. It doesn't mean that it is only from the help of other income. With the special income, it is possible for him to cross the that 5 crore limit, right? So and hence, so he actually, other income crosses 1 crore, right? So 15% such as will be applicable. Next, other income is 300 lakh. Special income is only 100 lakh. Total income comes around 400 lakh. This is little bit confusing. 400 lakh. Other income lies between here, more than 2 crore category. More than 2 crore category. Okay. More than 200 category. More than 200 category. So for other income, surcharge is 25%, because we have discussed it, right? 25%, both in 115 BAC and normal also. Okay, 25%. For special income, though it is more than 1 crore, right, is total income, and hence we are charging 15% to maintain equality. The last category, last example, other income is 600 lakh. Now he is crossing his limit only with the help of other income. Special income is only 100 lakh, not having crossed 2 crore also. Total income comes around 7 crore. Special income 15%. Why 15%? Even though it is not crossing 2 crore. Why it is? Because since its total income is more than 1 crore, right? So maintain equality. The income tax government says that For special income, 15% is the surcharge. For other income, if you opt for old tax regime, 37% is the surcharge. Why? Because more than 5 crore, right? But if you opt for new tax regime, that is 115 BAC, the surcharge is only 25%. Okay, this is you need to revise for several times, because through practice only it is possible for you to revise. If you have any doubt with these concept till this concept, you can simply mention your doubts in the comment sections. You can also reach out to me, as already suggested, Instagram, LinkedIn, mail ID that was already mentioned in the description box. I hope this second part also benefited for you. Share this video to the n number of students so that they also be benefited. And remember not to forget to subscribe to my YouTube channel, so that you will also be more encouraged to make classes like this. Till then, signing off. See Abhijith Acharya, Abhi Classes. Bye bye.